Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Alright guys, welcome back to yet another episode of the Young Investors Podcast. Hamish Hodder is joining me as always from just over the other side of a couple of highways. How are you going, mate?
I'm doing well. Yeah, we were just saying we still have an unbelievable amount of lag, even though we're in the same city. So I don't know what's exactly going on with that, but somehow the exact same amount of latency from here to Canberra to here to like a few kilometers away. So it's exactly unbelievable. Melbourne internet infrastructure is, I guess, not very good. I don't know.
Yeah, I don't know what's going on. I looked up if we could get really, really fast internet because I was like, I got that in Canberra and it was such a little luxury that I just loved. It was worth it. It costs a lot, but I loved having that ultra fast. I think I had 200 up, 200 down or something like that. All the time. And I just loved it. But I don't think I could quite get that where I am in Melbourne.
No.
Anyway, how you going, mate?
Yeah. I'm doing well. Hit the 200,000 subscribers.
You did
this week, which is very, very exciting.
Congratulations.
It's kind of funny. It's obviously 100,000 is like the big milestone. I think anyone who kind of tries to make YouTube content is kind of first striving for. But even the 200 was felt pretty good. And I think it's interesting because the 200 it's kind of a challenge to have that second 100 lot come a lot faster than the first. And so it's a different kind of excitement, I guess, for hitting this milestone. But on to the next, on to the big 300.
Yep, nice. The more I think about it, it's a bit brutal that you get that silver plaque at 100,000 from YouTube, and then you have to 10x to get the next one.
Yeah,
it's quite difficult. You have to hit the old million, which I have still not gotten. But
well, you're pretty close.
I'm getting there. Hope to get a goal. But yeah, how does it feel? Yeah, you hit your 200K. Congratulations, man. That's sick.
Thank you.
It's just so annoying that YouTube's algorithm has made gaining subscribers just so much harder these days. I mean, it used to be. I feel it used to be a lot easier. Or maybe you feel differently, but I feel like it used to be a lot easier.
No, I think that's definitely true. I think it's also true that the bigger you get, just the harder it is to find, especially in like the finance niche. It's like there's not that many people in the space. So as you get, you're pushing up to a million subscribers, it does actually get quite difficult to get incremental subscribers. But it has definitely got a lot more difficult. It is funny though. Every video that I make, I make an effort to encourage people to subscribe, around the 3-minute mark of the video. They do those. I get a lot more subscribers during those videos, which shouldn't be surprising, but it's something that I always forget to do in the videos. And so I've tried to be a little bit more intentional about that recently because it's such a simple thing to remind people.
Does work.
And it seems to work. So.
Oh, congratulations, my friend. That's a great achievement. And here's to many more hundreds of thousands of people.
Yeah, exactly.
All right, what are you chatting about today?
We've got a bit of earnings. We're continuing on into earnings. We've got Alphabet reporting their third quarter earnings. You've got Tesla earnings as well.
Yes.
Very interesting stuff going on over there. I'm going to talk about Robinhood, the stock trading app, getting into election gambling. And what else have you got?
I was just going to say, it's crazy how much, I've just been reading how much money is flowing into election betting. It's wild. Yep. So I'm very interested to hear your story on that because it kind of makes sense that, what's his name? Vlad wants to get Robinhood where the money is. Because there seems to be a lot of money floating around in both directions, betting both ways. So that'll be interesting to hear about. And then I'm going to talk similarly on the election front. We're going to talk about Donald Trump and his publicly traded company, DJT, which is the head honcho company for Truth Social, because that stock is skyrocketing. That's
really,
I'll tell you about it, but it is pretty wild.
Awesome. Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Yeah, let's get into this the Donald Trump stock. What's been going on? I'm completely out of the loop in regards to this. I had no idea it was surging. So what's been going on?
There was that big SPAC merger and whatnot for Donald Trump's company. I think that might have been earlier this year. But yeah, so you've got Truth Social, which basically trades under DJT stock, which is, what is it called? Trump Media. Trump Media. So, and that stock, it was on Monday, rose 20%, Hamish. 20% in a single day. It says here from CNBC, shares of Donald Trump's social media company surged more than 21%, 21% on Monday, on the heels of the Republican presidential nominee's campaign rally in New York City. Trump Media stock closed at $47.36 per share, eclipsing its recent peak in mid-July when the company's market value soared after Trump was nearly assassinated at a rally in Pennsylvania. The spike was followed by a major sell-off that hit bottom in late September when DJT stock scraped below $12 a share. So it's gone from $12 in September to now $47.36. So how about that, eh? But the Truth Social operator recovered all of those losses in October as the election between Trump and Vice President Kamala Harris, the Democratic nominee, entered its final weeks. So it's seen quite a turnaround, Hamish, and that has led to Trump's net worth rising very, very substantially. So it says Trump owns 57% of Trump Media. And that stake at Monday's intraday high totaled around $5.4 billion. And that is more than half of Trump's on-paper net worth, according to Forbes.
There you go.
Yeah.
His net worth is like going up and down so sharply.
Yeah. Yeah, it's pretty crazy. It says here the value of Trump's majority stake has increased about $4 billion in the weeks since Trump Media hit its late September lows. Imagine that, being $4 billion richer, more than like half your net worth just in a few weeks. Thanks for coming.
Yeah, I mean, it's kind of funny. I mean, I guess I don't actually know any of the financials behind the company specifically, but it's a pretty small stock, so it's I guess it also in a large way probably reflects just what's going on or predictions, I guess, about the election outcome in some way. The more if people think that he's going to win, then it probably is being reflected in the recent improvement in the stock price, I would guess. But I haven't looked at any of the financials or anything behind the company, so yeah.
Well, Hamish, funny you should mention that. Let me tell you about them.
Good.
Because it is one of those cases where the movements of the stock price are not necessarily, well, not in this case at all, based on business performance. This is literally it's almost like what you're going to talk about later, election betting. That's pretty much what it's become. Yeah. So the numbers behind DJT stock, Trump Media, the market cap right now is $10.31 billion. Okay. So, it's not a massive company, but it's still quite sizable, right? In terms of market cap. In Q2, I looked at their last quarterly report, they had revenue of $837,000. So yeah, not a huge amount. Annualized, that's $3.35 million, which gives it, if you really want to hear the crazy number, a price to sales ratio of 3,077.
Is that a high price to sales ratio? I'm not sure. I can't remember if 3,000. 3,000 slightly on the high side, right? I think we look for under 2,000, I think is.
under 2,000 and the stock's undervalued. Oh dear. And of course that's just revenue. Okay. We say price to sales ratio, you'd never use it because it just tells you, it doesn't include any of the costs of the business. So once you do include costs, you get a net loss of in the last quarter of $16.4 million. So annualized, that's a $65 million loss each year.
Right.
Not making a huge amount of revenue and not making any money. Full stop. In fact, they're burning a lot of money, and that kind of leads to what it says here in this CNBC article that I was reading before. But analysts have frequently suggested that Trump Media's multi-billion-dollar market value and volatile stock movements have little to do with company news or the performance of Truth Social, which generates scant revenue and draws a relatively minuscule audience. They have instead come to view the stock as an outlet for the company's many pro-Trump retail investors to support the former president and a proxy for betting on his odds of retaking the White House. Right. So exactly what you're saying before, Hamish, because you're right. When you look at those numbers, maybe you can give your take, but when you look at those numbers, it seems like any sort of movement in the stock we're so far detached from business performance at this point that it's got to be just like essentially election betting. What's your take?
Oh yeah, I mean 100%. I mean to play devil's advocate just for the sake of it, you could argue that a $10 billion valuation for a social media platform. Yes, right now it's incredibly small, but maybe you think that it becomes one of the biggest social media platforms. And in that respect, if you're that kind of person who wants to or likes to speculate on a really small company becoming an Instagram or something like that, or a YouTube, then a $10 billion valuation in that kind of from that perspective, I guess I could see people betting in that way. I personally think that probably isn't going to happen, but you could see it from that direction. But I probably agree that for the most part, I would say it's very likely that you're right. We're so far detached from actual financials of the company that it's mostly people betting because of the name of the stock and because of who owns the stock, rather than what's actually going on behind it.
I do agree with you with that social media take as well. Maybe there's someone out there that is thinking that Truth Social will be the next thing. Because that would be your only bet, because where it is right now, and I've actually looked at some of the numbers because I actually don't know much about Truth Social, and so I looked at at some of the user data, and I looked at the user data of Truth Social versus the other big names in the social media world, and interestingly, they try and avoid talking about monthly active users and daily active users. So I found this one sentence buried in their latest quarterly report. It says, quote, this is an old number, but they say, since its launch, Truth Social has experienced substantial growth from 0 to an aggregate of approximately 9 million signups for Truth Social via iOS, Android, and the web as of mid-February 2024. And this is a report that they put out in June. So they could have given us an updated number, but they chose to tell us. I mean, this is the company saying this, so I think they know what the current number is, but they chose to tell us the stats from mid-February of 2024. That what I said is not daily active users, it's not monthly active users, it's just signups. It's just total accounts having been made.
I think it would be quite a miracle if because it's essentially Twitter, it's essentially X, right? So I think it would be quite a miracle if they were able to compete, given we already had an example from, I believe, earlier this year, or maybe it was the end of last year, where, Meta Platforms, the biggest social media company in the world, was unable to drag their, how many billion monthly active users they have onto their own, Twitter version, which was called Threads. As of right now, at least, it's got nowhere near the engagement of Twitter. If they couldn't, they basically integrated it into Instagram, and they still couldn't, with their billions of users, and they still couldn't compete with Twitter. At least right now, I guess that's how it looks. But so I would give any company trying to compete against any social media business, I think that would be quite it's quite a challenge if there's already a very well established player.
In total, we got 9 million signups for Truth Social. I did try and look for monthly active users and daily active users in the report. It's mentioned 3 times each, and it's mainly just definitions. There's no statistics attached. So what I did next is I looked up on just the Statista chart for monthly active users of all social media sites. And the lowest one reported on their very long list was actually Pinterest. But even Pinterest had 498 million monthly active users, 55 times larger than Truth Social. And I don't know about you, but I don't know too many people that log on to Pinterest.
What are you talking about? Pinterest is the hottest photo sharing social media. What are you doing? Yeah, I can't think of another photo sharing social media that beats Pinterest. Yeah. There's not a single one.
I wonder if I've got the rest of them. Yeah, I got the rest of them here. It's listing Twitter at 611 million, it's Snapchat at 800 million, Facebook Messenger at 1 billion, TikTok 1.5 billion, WhatsApp 2 billion, Instagram 2 billion, YouTube 2.5 billion, and Facebook 3 billion monthly active users. And that's of April 2024. So 9 million total signups. Truth Social's got a long way to go. But
yes,
very, very interesting. But the funniest thing I found about all this, especially after talking about user data, 611 million people on Twitter and 9 million signups total on Truth Social. With the recent rise in market cap of Truth Social, or DJT, Trump Media, people are saying that, well, actually, Truth Social and Twitter are roughly valued at about the same level at the current time, which is kind of crazy. Truth Social or Trump Media is now, what did I say, 10.31 billion market cap. And we know that Twitter has suffered quite substantially. Of course, it's private, so we don't know. But there are many people saying that it's less than half of what it's worth, less than half of what Elon paid for it. And when you look at the amount of revenue that they've now lost through the advertisers boycotting, then you definitely agree with that. So quite interesting. Overall, what else have I got? Yeah, so overall there was a 21% jump on Monday, a further 8% jump on Tuesday. It says here, shares of Trump Media rose more than 8% on Tuesday after whipsawing in the company's heaviest and most volatile trading day since going public. It was halted 5 times yesterday, Hamish. It says here, nearly 16 million Trump Media shares changed hands in the first 10 minutes of trading. By 10:15 a.m., the company had already surpassed its 30-day average trading volume of 35.1 million shares. By 1:15 p.m., Trump Media's volume surpassed 134 million shares, the highest level since October 2021, when the then private media company announced plans to merge with the blank check firm known as DWAC. So they had a massive, massive spike in trading volume, and it got halted 5 times.
Wow.
So there you go.
There you go.
Yeah, hectic stuff going on with DJT, but overall, Donald Trump has has found himself worth a lot more money in the last couple of weeks.
Yep, exactly. And as you kind of alluded to, there's probably quite a lot of the Trump stock price that is essentially people gambling on the election result, which is the US election is next week. I believe it's on the 5th. Which I guess is the 6th of November for us here in Australia. I think it's Wednesday. And so there is a lot of there's a lot of gambling going on as well, not just in Trump's stock price, but now on Robinhood. So US stock trading app Robinhood announced Monday users can begin trading the 2024 presidential election. That's, it was 8 days away at the time of this article.
Yeah.
The first question you might ask is, why is a stock trading app offering gambling? And that's a good question.
Why not?
Yeah, exactly. Why not? And I mean, it is kind of interesting because you might wonder, well, do they just offer betting now? And it is gambling. Like, let's not kid ourselves. If you're speculating on the result of the election, it is gambling. But this kind of gambling is gambling using financial products, using financial markets, and it's actually kind of interesting. Essentially, these election predictions are being made using derivatives contracts. So in the same way that you can buy like a call option contract, which is it's a financial contract based on a stock where you might be buying the option to acquire a stock at a price at a future date. You can now do the same thing, or you have been able to do this with the US election. So essentially, how it works is you're buying a financial contract that says it will pay you, or whoever sells the contract to you, will pay you $1 per contract if Trump wins, for example, and $0 if he loses, or it could be the same for Kamala Harris. It could be $1 per contract if she wins and $0 if she loses. And so if you're buying that contract for, say, 50 cents, then you're essentially getting 2-to-1 odds. And so it's kind of an interesting mix of gambling, but using actual, financial contracts that are typically used
Mom, I'm not gambling.
Yeah, exactly.
It's not sports bet. I'm not gambling. I'm investing, Mom. Stop it. No, I'm investing.
Yeah, but it's an interesting mix because you're essentially using these kind of futures contracts that typically are used by companies to hedge their risk in certain commodities. Like if you're an airline that has to spend a lot of money on oil, for example, then they can use these kinds of pricing contracts, these kind of financial contracts, in order to protect themselves from wild swings in oil. And it's just funny to see these kinds of contracts be applied to something as ridiculous as betting on the US election. But that's
wild.
That's the world we live in.
Now it's companies hedging about economic conditions under Kamala or economic conditions under Trump. We got to hedge that.
Yeah.
We don't want to be impacted by either of them. No, This is definitely just speculators.
yeah, exactly. And of course, this isn't new. These kinds of bets have been around for quite a number of elections, actually. These were around in 2016 and in 2020. There's sites that you might be familiar with called like Polymarket and Kalshi, which actually use cryptocurrency blockchains to offer these kinds of bets.
Oh, okay.
So they set up essentially it's the same principle. It's basically a cryptocurrency contract that pays you out $1 if the candidate that you select wins, and pays you $0 if they lose. While these sites have existed, Polymarket is an offshore company, so they're not kind of under US regulations. They're only technically offering betting to non-US citizens, although I'm guessing since it's cryptocurrency, there's nothing really stopping you from kind of going around that, which is how a lot of these kind of offshore betting sites can kind of get away with marketing themselves to American customers, even though they technically, can't actually serve those customers. And when it comes to US regulated betting sites, it was until very recently very unclear whether US election betting was allowed. And that was something that a site called Kalshi was kind of dealing with, where they actually had a legal battle with the Commodities Futures Trading Commission over whether they were even legally allowed to offer these kinds of bets. And just this week, or I believe it was last week, a court ruled in favor of the betting sites, essentially saying, have at it. You're allowed to offer gambling on the US election. And so that ruling last week essentially set the precedent for more official trading, companies like Robinhood to now participate in these kinds of bets. And so the Commodities Futures Trading Commission is going to be appealing the ruling, but shortly after the decision, interactive brokers launched various types of political contracts, including betting on the election, and Robinhood, which uses interactive brokers systems, now offers these bets. And so,
well, there you go.
And so essentially, I guess to summarize, you have kind of these offshore sites like Polymarket that have just been always offering them because they're offshore and not bound by US regulations. Yeah. Then you had some onshore US sites that were kind of just pushing the boundary, and then the Commodities Commission came after them, but the court said you can do it. So now you have actual brokerage sites saying, well, now that the court said it's okay, we're gonna why would we stay out of this? Betting on the election has everything to do with investing. So why not offer it on our sites?
And actually, if you open your McDonald's app, you'll see on the left-hand side, you can now bet. Oh, yeah. Walmart's getting on the action, Hamish. Wowee. Yeah. Walmart, on their online site, you can, just everyone. They're like, wait, we can do this now? Let's go. Quick, we've only got like 5 days left.
Yeah, it is quite funny to see them do it as well. With like just a couple of days, kind of to go in this election, they've just kind of figured, I guess, that they'll probably make a bunch of money from it. So, I don't know, why not have a go at it? And as you kind of spoke about in the previous story, these markets are not small. There's a lot of money betting on this election. Yeah. Polymarket's the one I always look to because I believe it's the biggest. And the total volume of what's been traded on this bet essentially is $2.2 billion. So this isn't some, small kind of market. Like, this is a lot of money that people are betting on either Trump or Harris to win this election. And it's kind of fascinating to watch it.
I think I can't quite remember, but I think I was talking to you when you were telling me to look at some of the sizes of individual bets that were being made as well. And we were I think it was us, wasn't it? We were just astounded that some people were, and it was going in both directions, wasn't it? There were people making massive, massive bets on Trump and Kamala Harris. So, I can't remember the sizes, but I remember you were telling me like millions and millions and millions of dollars going each direction.
Yeah, and I think it's kind of interesting. That is one of the criticisms of these kinds of markets is because the volume, there is a lot of volume, but relatively speaking, when we're talking about financial markets, the volume is quite low. And so when you do have these big bets being placed, it can move the odds, so to speak, quite significantly. It can move the prices of these markets a lot. And so they actually are kind of prone to manipulation as well, which is kind of one of the criticisms of these kinds of markets, I guess, as an indication of, as using them as an indication of who's going to win, because a lot of people like to look at this and say, well, it's real people putting up real money, so it's probably a better reflection of who's going to win than, say, the polls that can be, manipulated in other ways. But there are certainly limitations. But yeah, just on Polymarket, I'm just looking at bets over, $100,000 a piece, and there's one being made every 2 hours. 100,000, 119,000, 200,000. So it's pretty crazy. $500,000.
That's insane, dude.
That's
insane.
With it's pretty some pretty crazy bets. But there's kind of some strong opinions, I guess, about these kinds of bets. I don't know what you think about Robinhood offering these kinds of products in their app. I thought Robinhood's statement was pretty funny as they added these products in. They said, "We believe event contracts give people a tool to engage in real-time decision-making, unlocking a new asset class that democratizes access to events as they unfold," which is a really, really nice kind of chat GPT.
Democratizing access.
Like, can you imagine if betting sites, just pure betting sites, like, said this every time they offered a new market? Like, we're just giving people real-time, engage in real-time decision-making on race 8 at the Melbourne Cup.
Democratizing access to the races, you know?
Yeah, it's a new asset class, isn't it?
Yeah, it is a new asset class. The
Like,
racehorse,
I don't
greyhound.
know. I don't know if this is what they meant when they said diversification, like when they were teaching diversification in corporate finance. I don't know if they meant.
I think Warren Buffett said something about that.
Yeah. What does it keep? 5% in gold and then 5% in Trump futures, 2024 contracts, something like that. Yeah.
No, I think Warren Buffett's against diversification. So by that analogy, I think he wants me to go all in on race 8.
Exactly.
No, that's wild. Yeah, I don't know. What do I think about this, Hamish? I think it's just funny. You know, I think I do like to criticize a lot of these things like these new up-and-coming brokers, because inevitably they run into some sort of cash flow problem. They need to grow their business, and they just lean into things that I'm not necessarily down for. Like they'll try and get young people to open like margin accounts and stuff like that. I just think just leave that alone. Don't advertise that stuff. I don't like even, you know, some budgeting apps will direct people through to signing up for credit cards and stuff like that. Even that, I'm a little bit just like the underlying strategy is to try and prey on those that are not going to make good financial decisions. And I kind of think, you know, a broker, it's kind of conflicting. Like you'd start a brokerage site you'd hope to be like, yeah, we're democratizing access to, you know, investments. So buy into these publicly traded companies, build a portfolio of ETFs, you know, take charge of your financial future. And I don't think you can make that same argument when you start to include things like sports betting. Like it just doesn't fit that kind of messaging. And I get it. Like they're just doing it because they want to make a shitload of money. Like I get it. And all companies do. All companies want to make a shitload of money. But I mean, keep your messaging consistent. I don't like to see it. I mean, there's nothing wrong with it. I think there's nothing wrong with people betting, you know, as long as you're properly informed and you understand the risk of loss. Like that's fine. It's your own decision. I don't want to tell you what you can and can't do with your money. So fair enough. But yeah, I just don't like the whole, I don't know, the whole like chasing the next dollar from these brokerage sites, and they'll kind of do anything to try and get that next dollar, because it flies in the face of what they believe in. They say they believe in, you know, people building wealth and making smarter financial decisions and that sort of thing. It's like, okay, why are you trying to get people so hard to sell to sign up to credit cards at 30% interest rate? Why are you trying to get people into sports betting? You know, why are you trying to get young dudes into margin accounts and making big bet? Like, why are you trying to do this? So that's my. It seems hypocritical. That's where I kind of get annoyed. But
I don't.
What do you think?
I don't like the blurring of the lines between like financial markets and gambling. That to me is kind of odd. Like I don't care if people. I like gamble. I mean, I don't really gamble, but I like gambling every now and then. And but I think it should be like kept in its own box, you know, very distinct from, you know, financial markets are over here. This is wealth building. This is, you know, diversify your portfolio. And then this over here is completely speculating.
It's sports bet.
And the blurring of those lines is really weird. It's the same as, you know, all of these apps now offering a very easy way to access, you know, derivatives contracts, like things like call options and put options. And these are, you know, very sophisticated financial products that historically have only been available to professionals who've, you know, gone through a degree and they know and understand the risks. And now, you know, through apps like Robinhood, people can use these contracts essentially just to gamble on stocks, which is not how these contracts are supposed to be used. They're supposed to be used to hedge and as a part of kind of a broader portfolio strategy being done by a hedge fund manager or a portfolio manager. But they can be used in the other way, which they can be used as essentially just a way of turning the stock market into a casino, and that's pretty much what apps like Robinhood do. They just they give these, you know, give people access to these contracts. So I don't like the blurring of the lines. I think keep the gambling on a gambling app and keep the stock market on a different one.
I agree. Very interesting, Hamish. Very interesting indeed. Should I take us on to Tesla earnings?
Yes. I saw.
Oh, did you have anything else to say about the gambling stuff? Sorry.
No, that's it. That's it. But I did see Tesla stock did very well. The stock price was surging after earnings, so it must have been pretty good.
What did I say? Donald Trump made like $5 billion, something like that. Well, Elon Musk in the last week is $26 billion richer.
Not bad. Not bad.
How crazy is that? Yeah, it's not bad. It says Elon Musk is $26 billion richer after Tesla's best day on the stock market since 2013. Wow. Tesla shares soared 22% at their close, their second biggest gain since the company's IPO in 2010. Musk is now worth about, get this, Hamish, $269 billion, according to Forbes, putting him more than $50 billion ahead of good friend and former Tesla board member Larry Ellison, who remains the largest shareholder in Oracle. Musk controls close to 13% of Tesla's outstanding shares, accounting for the bulk of his net worth, though he also owns a big chunk of SpaceX, which is valued on the private market as over $200 billion. Wow. So Elon has had a very big payday. Investors were exceptionally happy with Tesla's earnings. So let me tell you about them. And I should kind of preface this by saying people are getting increasingly skeptical of EV makers. Because what we've been seeing over the last little while is orders kind of getting, choked up a little bit. Interest rates are high. People aren't committing to these big electric car purchases. Electric car makers have started offering all sorts of incentives that they normally wouldn't, just to try and kind of get demand up. And people were very, obviously, Tesla is America's largest EV maker. So people were getting skeptical that Tesla were going to really suffer and their earnings would not be as good. But one little thing that they had in the back pocket is that Tesla is one of the few companies that can make EVs reasonably profitably, and that has certainly helped them. So, Hamish, let me tell you about it. Top line, their revenue was up 8% year over year, from $23.3 billion to $25.2 billion, so 8% bump to revenue year over year. Of that revenue, automotive revenue, so car sales, only grew 2%. So they didn't sell that many, or they didn't realize that much more revenue from car sales versus last year. On the other hand, their energy section, selling power walls, power packs, that kind of thing, that revenue grew 52% year over year. So that side of the business is now seeing quite substantial growth, which is good to see. And then services and other revenue grew 29%. So that was their revenue makeup. Fairly consistent, little bump in automotive, which is the largest revenue category by far, but really solid growth in energy and services. Operating expenses fell 6% year over year, so that's really good. They've been saving some money with their operating expenses. Operating income grew from $1.76 billion to $2.72 billion. So operating income has grown 54% in the last 12 months, which is really good to see. Whoa. And operating margin grew from 7.6% to 10.8%. So that is pretty solid. I would say that is pretty solid growth in your operating margin. That's pretty crazy. It's interesting. You can have I mean we spoke about this I think last week with Netflix. I believe it was that even if you only have a little bit of top line growth, if your costs, your expenses don't grow that much, or they even go down in this case, then when it gets to the operating income line, it can be quite substantial. Yep. Yeah, definitely. Free cash flow for Tesla has been choppy with all the investments they've made, particularly around AI and also building out factories and whatnot. But this quarter, they've managed $2.7 billion in free cash flow, up from $1.3 billion last quarter, and $848 million a year ago. So that remains to be choppy, but you could say it's heading in the right direction, which is good. They've also grown their cash pile by 29% over the last year. Now sits at $33.6 billion. So they have quite a gargantuan chunk of cash on the sidelines, which is very, very good to de-risk the future of their business.
Yeah.
And then I guess that's most of the financial stuff. The only other stuff I wanted to talk about is more like operationally. I think people love to look at what's going on operationally with Tesla's business. I will give the disclaimer, I have not yet listened to the earnings call. I've just seen bits and pieces, so I need to sit down after this podcast and actually go through the earnings call. But operationally, just from the earnings report, like production of vehicles is up 9% year over year. Deliveries up 6% year over year. The storage, the energy storage, the batteries that they deployed up 75% year over year. So that's more evidence that that battery kind of energy storage side of the business is really starting to grow. They got 20% more supercharger stations. They got 16% more Tesla locations. Things are just kind of chugging along pretty well for Tesla at the moment. People were expecting crisis mode and they got just decent results. Like, granted that these results are not going to, blow your socks off like Nvidia, for example, but they're pretty solid. Like, they're posting all the right numbers that they need to. Nothing here suggests that they're in crisis mode or that they're really stuck for demand. They have sweetened the deal on some of their car sales, dropping prices, adding incentives to kind of stimulate demand. But all that's really done is it's kind of lowered the amount of money that they bring in per vehicle. It hasn't meant that they've gone horribly unprofitable or anything like that. So generally, I mean, sure, this could be better, but it's certainly not what people were expecting. They were expecting a bloodbath, and because it was actually pretty decent, the stock price has really just surged.
I guess that's probably been the story of Tesla stock over the past year or so, which is it's kind of reflected just the uncertainty people had about what was going to happen in the next couple of quarters, because you're right, it could have been really, really bad. And they just seem to be kind of chugging along and doing okay. Yeah. So that's enough to make the stock recover a lot of what it had lost earlier in the year.
Elon Musk said on the conference call, this is one thing I did hear, and this is the obvious benefit to Tesla. He was saying that Tesla is the only EV maker that he's aware of that runs profitably.
Wow. Okay. Yeah, that's crazy.
No other. I mean, maybe we need to fact check him, but I would assume that he's not lying, and I assume he's well informed in this area. The only EV maker that runs properly, and he even went so far as to say the only EV division. So, of course, like you say, a Volkswagen, they have an EV division, whereas maybe overall they're profitable. He said even an EV division, the only one that's profitable. So that, of course, helps. We've seen that, other EV makers are trying to pull back and be like, oh, crap, we're losing a lot of money here. We need to pull back. Whereas Tesla maybe they do need to, drop their prices, for example, is what they've been doing. But they're still making money from it. It's not like they've gone into the red, which is solid. Yeah, so other interesting just tidbits that I saw in their report. On October the 22nd, they produced their 7 millionth vehicle total, which is pretty cool. And of the 7 million, actually 3 million of them have come out of Shanghai. So that Shanghai factory is an absolute beast, considering that only opened a few years ago, and they've had the Fremont factory in America for ages. Oh, one of the reasons that the stock did go up so much is that Elon on the conference call, I think, said that vehicle growth will be about 20 to 30% next year. So he's still very optimistic. Yeah.
That's a crazy
still very
prediction.
Optimistic. Yeah.
Wow.
He was like kind of battling with it. He's like, it's probably not. I probably shouldn't say this, but I will say it. And he's like, I think vehicle growth is going to be 20 to 30%. So that probably helps the stock a lot. But anyway, that's a brief look inside of Tesla. Tesla's Q3.
There you go.
All right, hit us with Google, and then we'll finish up after that. What's going on in the old world of the alphabet?
Yes, so Alphabet reported their Q3 results as well. And again, they've just continued to be an advertising and in this particular quarter, a cloud computing beast, which we'll get into their cloud business, which has been kind of dominating. But overall revenue for Alphabet came in at $88.3 billion, which was up 15% year over year. So still somehow growing at double digits. And they're closing in
pretty impressive, really.
Yeah, somehow closing in on $100 billion in revenue a quarter, which is quite astounding. And as always, most of this revenue came from their services revenue segment, which produced $76.5 billion of revenue, up 13% year over year. The biggest category was Google Search, $49.4 billion in revenue, up 12% year over year. YouTube Ads was $8.9 billion for the quarter, up 13%. Year over year.
Right.
So YouTube Ads continues to grow at a similar rate to their other segments, but it's always an interesting one for us to keep an eye on and see how our ad market is performing. It would be quite concerning if we start seeing the rest of Google's business grow and YouTube Ads just YouTube Ads down 70%. Oh,
It is the most important number in the history of investing. For us.
For us.
For us specifically.
Yeah. There is actually one part of Google's business that is shrinking. Their Google network advertising reached $7.5 billion for the quarter, which was a 3% decline from the previous year. And that's been a segment of their business that has been declining a little bit over the past few quarters, really. So these are kind of the banner ads that you see on just any website. So if you just run a website, you can kind of allocate some banner space for ads, and then Google runs those ads. So that's called Google Network Marketing. So yeah, that category has somewhat suffered, which I think maybe shouldn't be too surprising. Given most people use ad blocks to block those ads, and they're probably not super effective compared to other types of advertising, which are much more popular online now. The last category in their services revenue is subscriptions, platforms, and devices, which includes things like YouTube Premium. Still kind of annoying that they don't include YouTube Premium subscriptions in like their revenue category with YouTube. They have like YouTube Ads, but then they don't tell us exactly how much they make from YouTube Premium, which would be something interesting to see. But all of their subscriptions combined, it would be all of their subscriptions, all of their sales from the Google Play Store and that sort of thing came in at $10.7 billion, which was up 29%. Year over year. So big jump in that category. And I'm sure YouTube Premium probably played a big role in that. The best performing part of their business by far for the quarter was their cloud revenue. Their cloud subscriptions came in at $11.4 billion, up 35% year over year.
Wow.
So that is huge growth in their cloud segment of their business. And the management team attributed it to their artificial intelligence offerings, such as subscriptions for enterprise customers. Alphabet CEO Sundar Pichai opened the call with investors, saying the company's full stack of AI products is now operating at scale and being used by Google's billions of users and creating a virtuous cycle. So there was a lot of credit given to artificial intelligence during the conference call, which, you know, I'm sure part of that is true, but I'm also sure part of that is just how many times can we say artificial intelligence? Because every time we say it, our company becomes more valuable.
Yeah, definitely. It's actually interesting because I think from last quarter, or even the last few quarters, that cloud business that is seen that massive top line growth, right? But it's only just recently become consistently profitable. Yeah. But it's not profitable like it's made. However, what did you just say then? 11.4 billion in revenue, but it doesn't keep anywhere near that in income. So I just had a quick look, and for that quarter, they actually kept nearly $2 billion in operating income from that segment.
Yes.
Which is like from that same quarter a year ago, they only kept $266 million. So it is actually now starting to contribute. Obviously, it's no search. It's no Google search. But it's starting to really contribute to that operating income as well, which is good to see.
Yeah.
So now that top line growth is actually flowing down into, you know, solid gains in the bottom line for that business as well.
Yeah, it's actually been. I've kind of watched Google's cloud business a couple of years ago. I spent a bit of time looking into it, and it's really interesting how they went about kind of structuring it, because they really did. I think it was a couple of years ago. I don't know. Can't remember what you just said exactly when they became profitable, but a few years ago they were very unprofitable, and it's essentially because they front loaded a lot of the infrastructure and building out the staff necessary to kind of maintain or to support much bigger enterprise customers. And so they kind of front loaded all of these kind of annual recurring costs. And so they were deeply unprofitable. But now as they're kind of getting those customers and getting those customers, the costs are not really rising much at all. So it's kind of all falling to the bottom line, all of these kind of incremental customers. And so,
that's good.
Their top line is growing at an incredible clip, but also the bottom line, it's kind of all just falling down. So, it's been quite interesting because they're quite a bit away still from Amazon and Microsoft, who are kind of the two big players in the cloud space. And then the final kind of smaller category, but maybe interesting to watch, is their other bets category, which came in at $388 million of revenue. So very, very small. It was up 31%, but that's not really all that meaningful because it's such a small category. But the other bets category, hence the name, includes all of Alphabet's speculative kind of moonshot investments and smaller businesses. Right. And one of those businesses is Waymo, their self-driving taxi business. And they did have a bit of news about Waymo. Last week, they closed a $5.6 billion funding round to expand its robo-taxi service in Los Angeles, San Francisco, and Phoenix, Arizona, 2 more cities. And so they've been operating these kind of fleets of robo-taxis in very specific cities where they've kind of fully mapped out the city and they can operate in those areas. But if you let that taxi go in a different city, it just wouldn't work. So it's kind of a completely different approach to Tesla, where they're kind of making it as broad as possible and collecting data as broadly as possible, whereas Google's approach has been to kind of map or start in specific cities and then kind of expand that way. But they just raised almost $6 billion to continue expanding their business.
Dude, they got some issues to deal with though over at Waymo. Have you seen? I'm sure you've seen those videos of like the Waymo traffic jams and the trying to return to the parking lot and just caught in a loop and honking at each other all night and keeping up residents of local residential buildings and stuff. Oh, yeah. They got to get their shit together. To be perfectly honest, like they're so bad at the moment. As I understand, the service itself is quite good, but it definitely gets caught in like loops of its own doing. Like,
those videos are hilarious. It's like 3 a.m. and all the Waymo cars are trying to get. They're all stuck in like the car park. Yeah, and they're all honking each other,
honking at each other to move, and they can't move.
They're ridiculous. Funny. They've definitely got some work to do. That's for sure. You're definitely right. Yeah. So those are all the revenue categories. In total, $88.3 billion. Crazy. Down to the operating income line, they produced $28.5 billion, which was up 34% year over year. So again, they were able to grow revenue at double digits, but growing their costs at a smaller rate. So at the bottom line, they're growing at 34%. Net income, $26.3 billion, was also a 34% year over year increase. I can't exactly remember when they started paying the dividend, but they've been paying a dividend now. And in the last quarter, they paid $2.5 billion worth of dividends. All right. They also announced next quarter's dividend to be 20 cents per share. They also repurchased $15.3 billion worth of stock, which has been kind of the same amount each quarter for the past few quarters. And so...
What did you say, the 20 cent dividend?
20 cents, yeah. So it's quite
20 cents.
Quite small.
Stock's $171.
Yeah. So what is that in an annual dividend? It's like 80 cents. So yeah, maybe like 0.4%. It says here,
Google just says Yeah, you're right. Google says the dividend yield is 0.47%.
There you go. Yeah, so it's a very modest dividend. Isn't that crazy though? It's a 0.4% dividend yield, but it's $2.5 billion. Like that's the total amount they paid out to shareholders, which gives you an idea of this, the scale we're talking about. It's quite impressive. But they also repurchased $15 billion worth of stock. So overall, through dividends and share repurchases, they are doing a lot of distributions now. And they have been doing that for quite some time. This isn't something that's new, but they are continuing to do a lot of distributions. And even with, so, in the last quarter, $18 billion they essentially distributed to investors, they still have $93 billion in cash and short-term bonds. And so they have lots and lots and lots of cash, and they're producing lots of cash.
That's what I call a war chest.
Yeah, it's quite the cash machine. So yeah, there you go. That's Alphabet. For the quarter, the stock was up 6% in after hours. So investors were quite pleased with the results. They were quite pleased with the amount of artificial intelligence references on the conference call. As Wall Street was, beat Wall Street's expectation for the number of AI mentions. But
and the stock popped. Well, there you go, Hamish. There you go. That just about does it for today, doesn't it?
Yes, that's all we've got. It's kind of unfortunate because normally we get Alphabet and Meta at the same time. I believe Meta is reporting in a couple of days, I think, and so we'll be able to do Meta platforms next week to kind of. Well, we won't be able to do a compare and contrast to Alphabet, but we'll be able to talk about the other half of the massive digital online advertising market.
Yeah, we'll have to figure out next week's episode. I'm going to Dubai at the end of the week. So we'll have to figure it, but we should do an episode next week because also it'll be after the election as well. So that could be quite cool to talk about.
Yes.
Not that anyone will need the news update. But yeah, I'll try and see when we can fit it in next week while I'm overseas. I'm not sure what the time difference between Melbourne and Dubai is either. So we'll figure that out. But yes, that is it for today. Hope you guys enjoyed the episode as always. Any sort of likes, comments, reviews are really helpful for podcasts. If you guys would like to give us a 5-star review on whatever platform you're using or just leaving some sort of review, that would be really, really helpful. We really appreciate that. It really does help. So yeah, thank you guys if that's something that you'd like to do. But with that said, I think that is everything. Hamish, enjoy the rest of your week, my friend. And with that said, and you guys that are listening, enjoy the rest of your week, and we'll see you back here next week.
See you guys.